Hello, everybody. My name is Joe Pivarunas. I'm the founder and managing editor of Nanalyze. We're a boutique media and research firm covering disruptive tech for a broad audience of retail and institutional investors across the globe. Today, we're going to talk about 6 eVTOL stocks. The question we've asked here is, are any taking off? Now, we'll get into what an eVTOL is in just a bit. But before we do that, I wanted to talk a bit about a story that some of you might remember. It's titled Reinventing the Wheel. That was the name of an article by Time magazine that talked about what was said to be at the time the tech world's most speculated about secret. Now, John Doerr, the man who all the amorous bulls hang their hat on, is a very successful venture capitalist. He's worth about $12 billion today. Made a lot of successful calls over time, but nobody's perfect. So he had called this the invention that was perhaps maybe bigger than the internet and predicted the fastest outfit in history to reach $1 billion in sales. Saint Steve Jobs said this was as big a deal as the personal computer. The inventor of this contraption said it will be to the car what the car was to the horse and buggy. It could carry the average rider for a full day nonstop on about 5 cents worth of electricity. It was said to disrupt walking, and the prediction was that cars will be banished from urban centers to make rooms for millions of empowered pedestrians. Well, that device was the Segway. And two franchises here that have some similarities that we both researched heavily, Girls Gone Wild and Segways. Now, both franchises are no longer being produced. They both generated a great deal of excitement when they came about, and nobody predicted they would fail as miserably as they did. And of course, you can still enjoy both of these franchises in certain places around the world. In a lot of the larger cities that frequent tourists, places like Rome, perhaps Budapest, they have old cities where people will rent segways and go on tours. Since walking can take a lot of time, a lot of people don't want to walk that much. They'll use segways for tours. So for an exorbitant price, you can ride a segway around and somebody will show you touristy places. Now, we have to be very careful about new modes of transportation and the extent to which they're predicted to disrupt, because we just don't know until they actually go online. Now, eVTOL, so that E stands for electric, VTOL stands for vertical takeoff and landing. These are platforms that are being built. A lot of money has been poured into these platforms. It says here, this is a slide taken from Blade Air Mobility. They're a firm that we covered not too long ago. And they're talking here about the various eVTOL platforms from companies like Boeing, Airbus, Joby, and the like. So this is what the craft look like. They're made possible because of advancements in materials and lithium batteries, the same reason that consumer drones became so ubiquitous. The thesis, let's say the investment thesis, is that urban air mobility largely involves fixed point routes that don't exist yet. So they refer to this as urban air mobility, meaning that these will be routes that are largely found in heavily populated areas. They can initially be planned and brought into service using helicopters, and that's what Blade Air Mobility is doing. What Blade said is that when the eVTOL comes online, at least the one they plan to use, there won't be a cost advantage. However, it will fly a lot more quiet than a helicopter, which means they can expand more routes. Then when autonomy kicks in, and that will take a whole different level of certification to reach, then routes will expand because prices will drop so much. Now, trying to assess the size of this opportunity is very difficult, because whilst you can survey a large number of people and they'll tell you, yes, we'll certainly use something like this, and then you can extrapolate that out to make some guesses on the size of the total addressable market. You just don't know until the device actually comes online and people begin using it. So when it comes to stocks that you can invest in to play this thesis, it's very appealing thesis, the idea of air taxis. So there's a lot of interest from retail investors, and as a result, you see that we now have 5 SPACs that have debuted, and there was a company that was already trading, EHang, and all of these SPACs now are trading quite down compared to the $10 a share that the SPACs debuted at. The largest of the lot is Joby Aviation. Now, one firm on here that got attacked pretty heavily was EHang, and this was also hyped very heavily. So while the share price trades at around $12 a share today, it used to trade at around $124 a share until this report came out by Wolfpack Research. They called EHang an elaborate stock promotion built on largely fabricated revenues based on sham sales contracts. Well, we looked at EHang several years ago and noted that they were doing some interesting stuff surrounding using consumer drones to put on shows, and that was accounting for a chunk of their revenues. And then that ratio of revenues from that compared to their transportation services was going to change over time. And that was the last time we looked at EHang. We wouldn't touch the stock because they trade as a variable interest entity. So there's little point in researching a Chinese firm we'd never invest in just because it trades as a VIE. And you can read our piece on Alibaba. I'll put that in the description of this video so that you can read about the dangers of VI structures and why we got away from BABA, fortunately, at the right time. So what Wolfpack Research did, what you need to do if you're going to properly conduct due diligence on a Chinese firm is you need to go there and start knocking on doors, and that's what they did. It's a very interesting report. You can read through it yourself. If at least some of what it says in the report is true, this is a firm we want absolutely nothing to do with. So you can scratch EHang from the list of companies that we'll be watching going forward. Then there's Lilium. Now, they also had an attack from a short company, and Wolfpack, this firm that wrote about EHang, if you're familiar with how short activist firms work, they find problematic stories in the marketplace that they believe are rubbish. They investigate them, they short them, and then they publish a report. So they have a conflict of interest, you would say, and just keep that in mind when you read these reports. But as we said, if there's just a little bit of truth there, then that's a problem. Now, Lilium also had a short activist firm called Iceberg Research publish 2 pieces based on the belief that they didn't think Lilium would be hitting their certification milestones. That's what it's all about right now, is getting certification. So it says in the report that both Joby, who is said to be in the lead in terms of their being first to market, and Lilium hope that aviation authorities will certify their aircraft in 2023. That's next year. Joby, they say, is closer to the mark with 1,000 test flights, while Lilium has around 50 test flights on a 4th and 5th demonstration of their technology. And the report basically says that they don't believe the 30 motors used on Lilium aircraft, that the technology being used is capable of what the company says it is. So it's a disagreement on what they think the company can do. Well, a frequently asked questions popped up on Lilium website addressing some of the concerns that the short report raised shortly after it came out. And you can read those. And then the short firm came out with another report targeting their battery technology and some relationships. And it just started to get too much into the technical detail to be of interest. The question is, will Lilium be able to hit their targets that they say they'll be able to hit? And it's a disagreement between the company and the short firm, and we'll know next year. So that's where Lilium sits. Now, the remaining 3 stocks, Vertical Aerospace, Joby, and ACHR, they have aggressive ambitions for 2024. This information is taken from their SPAC decks. All 3 firms expect to have commercial aircraft going online just 2 years from now. And these are the estimates they've provided of what they hope to achieve. So hold their feet to the fire if you're an investor in any of these firms. We certainly wouldn't be until they actually have revenue. So perhaps this would be the year that we look at one of these firms more closely, provided they can hit these targets that they promised investors. So we'll see how much total revenue comes from these 3 firms, provided they pass that certification milestone, which is critical. You can see here, there's a company called SMG Consulting. They put out this great reality index, which shows you which firms out there are targeting 2024 to have a estimated, the EIS stands for an entry into service. I believe that's what that acronym stands for. So this is when they'll have certification behind them and they'll be able to start operating aircraft. they've provided here the likelihood that each one of these firms will hit that target. You see Joby is highly likely, and then ACHR and Lilium are said to be unlikely. Now, we read an interesting piece, and we'll link to it in the description of this video. It's the research piece we did with the same title as this video. And we looked at how ACHR said that they've achieved a certain level of certification that only them and Joby have achieved so far. And they weren't taking any risks on their technology. So while Joby is vertically integrated, kind of building everything from the ground up, like first principles thinking, ACHR has chosen to use components that are already available and certified and approved from different providers. So they're not taking any chances that their technology won't pass the certification process. So they claim that alongside Joby, that they're in a very good position to achieve certification. So there's a disagreement between the firm, again, and an external party, in this case, one that isn't financially motivated. So we'll see in 2024 which of these firms actually is able to achieve certification. All could, none could. And we'll also look to do a follow-up article in the coming weeks on those three firms. Now, just some thoughts around business models. We liked Blade Air Mobility because they were asset light. They didn't have to own and maintain aircraft. Takes a lot of complexity out of the equation. And we believe that that's a desirable business model to have. Now, the question is, will a vertically integrated eVTOL business model be appealing? And you see all these firms are adopting some sort of vertically integrated business model. And that's what we want to look at in our follow-up article. And you've got varying degrees of vertical integration, right? So Joby is choosing to do everything themselves, while ACHR is choosing to do some of the bits themselves. And you see Joby actually had purchased software from Uber that they could use, so they can start combining Uber lifts with these eVTOL rides. So there are different business models being used. Perhaps if a firm just chose to manufacture aircraft as opposed to the whole entire transportation model, there wouldn't be a compelling enough growth narrative. So we're going to look at those things in our next piece. As I said, I'll put the links to the research we used to produce this video in the description. Please just put your comments on the video. We'll answer them. Make sure you subscribe to our channel. And thank you so much for taking the time to watch this video. Much appreciated.